So hello everybody, you're very welcome to this IoD Surrey Connect Mindshare. And today we're going to be with Emma Pendrey, who's going to be sharing her insights, her information and her knowledge of working within the insurance industry in connection with this pandemic situation that we're sort of all operating in with COVID-19. Before I hand over to Emma, just a reminder of our foundational principles here. We're all here to share knowledge, skills, experience and insight. So please do use the chat. If you have any questions, please mark your questions with a Q and a capital Q in the chat area, and Emma and I will deal with your questions once Emma's 30-minute or so presentation has been completed. And finally, in the chat area, you will find a link to the evaluation form, and please do complete that so that Polly and I can make sure we're delivering what you as members and friends of the IoD want us to deliver. So without further ado, I'm going to hand you over now to Emma Pendrey. So over to you, Emma.
Thank you, Richard. Good morning, everyone. My name is Emma Pendrey, and I'm one of the founding directors here at Advantage Risk Solutions. I'm delighted to be able to share with you some of my own experiences, together with a wider view of the insurance market as it responds to the COVID-19 pandemic. This session is intended to be a thought-provoking discussion and general guidance to provide insights into the insurance market, to assist with managing your insurance and exposures during the COVID-19 outbreak and the increased risks that have arisen as a result. Whilst we're going to be discussing insurance market and cover in general, it would be inappropriate for me to comment on any specifics, policies or policy wordings. So please, if anyone has some specific circumstances they'd like to discuss, please contact me after the webinar. I'll make sure my contact details are available. We're going to start the discussion this morning with an overview of the insurance market, a bit of background of the areas of cover that may be influenced by the pandemic. We will then go on to discuss the subject of claims and provide some guidance on the market response to claims that we've submitted. In the latter part of the session, I'll discuss some of my own experiences with you with my clients, which will include some practical tips and further considerations to help you manage your own risk management, mitigation and planning. I'll then close with some information around certain issues that we're starting to see emerge and how we're going to respond to them. And finally, as Richard mentioned, it will be questions. We've had numerous discussions with our clients about the potential impact of coronavirus and the insurance cover that's available. The common concerns seem to be around staff absence, supply chain interruptions, customer demand that's being reduced. How understanding what losses might occur are far from straightforward, and also how insurers are going to respond. In this session, we will look at a few areas of cover that will be affected by the pandemic. We're going to look at business interruption, travel and special events, employers, public and products liability, management liability, also known as directors and officers, property insurance, vehicle, statutory inspection of your plant, and finally, cyber and data. To date, the hottest topic has been around business interruption. Many clients are warning of significant impacts from COVID-19, including manufacturing delays resulting from supply chain disruptions, preemptive office closures, or employees choosing to self-isolate, and reduced footfall in travel, leisure, and the retail sector as our consumer behaviours now change. The reality is many of these costs won't be insured. This is because business interruption policies traditionally focus on physical events such as a fire at your premises. To give you an example, a fire, flood, or storm at your premises is where your business interruption is intended to supplement your income to ensure business can continue. That said, business interruption policies may include extensions of cover to cater for scenarios that don't involve damage. These business interruption extensions are the focal point of most discussions around claims for loss of revenue or income and provide a glimmer of hope for some businesses. So I want to talk to you about those contingent business interruption extensions. Cover of this nature are typically restricted. They have lower sub-limits, shorter indemnity periods, and ultimately are not guaranteed to respond to the COVID-19 pandemic. So not much use for the vast majority of us. There are, however, some policies in the market which do contain a broader wording, probably unintentionally. Whilst insurers have been very quick to state it was never their intention to provide cover for widespread and global pandemics, the devil is very much in the detail, and I have no doubt the specifics of individual policy wordings, the phrasing and terminology will be the subject of very close scrutiny for the coming months, even years. So I want to talk to you about those extensions. Notifiable diseases. Some businesses may have chosen to purchase cover that will specifically provide for business interruption arising from a notifiable or infection disease, although every wording is different and will undoubtedly be subject to other policy conditions being met. This type of extension is not commonly included as standard. These extensions do vary significantly, some specifying the name of diseases and others providing cover for all infectious diseases. If the policy does not cover all infectious notifiable diseases, then cover is unlikely to apply. Another area is the non-damage denial of access. Some cover may exist if the business has purchased a non-damage denial of access extension to the business interruption. Again, purchase of these extensions tend to be rare and usually aren't included as standard. The intention of a denial of access cover is for loss of trade resulting from a denial of access to your premises. For example, a result of a police cordon. If a business is forced to close or is told to shut by an appropriate authority, this could be an area to explore, but it will no doubt be a subject of certain criteria being met. So in my conclusion, sadly, the vast majority of businesses have never really delved into the depths of business interruption extension, and therefore it's more likely this is a very unfamiliar area. If you're unsure about your own policy and what cover is provided, check with your broker or provider in the first instance. If you want a second opinion, then let me know. Moving on to travel insurance, and obviously not many of us are travelling at the moment. Many have already had to cancel travel plans or their holidays or have trips in the pipeline, but unfortunately it's unlikely that they'll go ahead. The Foreign and Commonwealth Office has advised against all but essential travel until further notice. As a result, many policyholders with cancellation or travel disruption cover in place will be able to claim for cancelled trips that were already booked and cannot now go ahead. Insurers are carefully monitoring the fast-moving developments in the coronavirus outbreak. Some have temporarily stopped selling travel insurance to new customers, while others have stopped covering cancellations or disruptions related to coronavirus for the new customers. Event cancellation. These policies are highly bespoke, and as such, there's no standard approach. It's difficult for me to provide you with any general guidance here. Any queries or claims should be directed to your broker or provider in the first instance. You need to establish cover available and the trigger points. Now, I'm now going to talk about management liability. I'm going to spend a bit of time on this because I feel it's a key area for all of us as directors. And just to explain, Management liability generally provides cover for directors as individuals, as well as the company itself for allegations of mismanagement. Commonly, there are three core areas, which are directors and officers liability, corporate legal liability, and employment practices liability. If an employee, shareholder, competitor, regulator, or pretty much anyone thinks someone in charge hasn't exercised due care in whatever capacity, they can be sued by the company and an individual, or both. There's a common misconception that directors' liability is limited. It's really not. It's actually completely unlimited. Recent events are likely to lead to the increase in litigation against directors as potential claimants scrutinise the way board manages the company through the crisis. Typical claims are going to involve such things as financial mismanagement, breach of company law. The Companies Act alone has hundreds of possible areas of non-compliance. Then we've got health and safety issues, employment practice problems, and this is going to be a really big area. We're expecting to see a significant increase in the number of claims relating to employment. And this is going to come out of this current situation. Employment practice liability provides cover for companies for employment-related disputes. These could include decisions around how you made decisions on furloughing your staff. How did you decide to furlough them, and did you document it? Redundancies. How did you decide who in your organisation to make redundant, and did you document it? Employment benefits. Changes in remuneration or changes in their hours. Did you consult HR professionals before making some of these changes? It's really important that we should be considering these things at this time. Employers and public liability. Most businesses will have some kind of public exposure, as well as employees who have concerns over the outbreak. Everybody is making business critical decisions at the moment to ensure their staff and the public remain safe, whilst trying to maintain some kind of business operation. Public and employees' liability policies provide cover for injury and illness to individuals. It's likely that policies will respond to claims or allegations involving the virus. However, establishing causation for the virus will be a significant challenge for any complainant. It's important to note that both employees and public liability require negligence in order to operate. There has been significant guidance and advice from the government on the subject of safety at work and travel. Any breach would need to be in contravention of these guidelines. For example, not providing essential equipment or sending an employee to a known affected area. Nonetheless, it's certainly conceivable that claims will be made. If so, defence costs at the very least will be covered under the appropriate public or employees' liability policy. Cyber. In general, cover provided under your cyber insurance policy will be unaffected, and policy should cover employees working from home. Typical cyber incidents such as phishing emails or inadvertent data leaks should continue to be covered as normal. It's worth noting that some insurers may require you to notify them of your working from home arrangements, so it's prudent to contact your broker or provider directly. Check if there's anything you need to do. Businesses should continue to follow the advice produced by the NCSC, the National Cyber Security Centre, on secure home working to ensure cybersecurity remains high level and IT systems are protected during these difficult times. I've put a link on the slide. If you don't currently have any cyber cover, one prominent cyber insurer is offering 3 months free access to their incident response helpline. You do need to register, so let me know if you want the details. I'm going to move on to managing insurance and risks, but I just wanted to mention that it's been really interesting to see how many of the prominent insurers in the market come forward and say their position in respect to policy cover, making their intentions very clear indeed, although those intentions are rarely encouraging for the insurance buyer. As I mentioned before, the devil is very much in the detail, and whilst insurers' intentions may be clear, the policy doesn't necessarily always operate in the way intended. So in summary, whilst there'll be a small minority who will benefit from the insurance protection for losses incurred as a result of the pandemic, the insurance industry, as it always does, will learn from the experience, and contracts and wordings will be adjusted to clarify the cover going forwards. We're already seeing underwriters adding endorsements or exclusions relating to COVID-19, and I suspect that's now going to continue. In fact, UK industries leaders have already combined to form a steering group with the primary objective to ensure that the industry can respond to future pandemics. Interestingly, only on Friday, the FCA have released a statement to say that they're going to be looking for legal clarity on the subject of business interruption claims. So it'll be interesting to monitor this closely over the coming weeks. In the next part of the session, I'm going to look at the practical aspects of managing insurance cover during the pandemic and provide you with some insights to our own experiences. I'll give you some tips and guidance on what should be considered and how some insurers have responded to specific requests during the pandemic. So, change of direction. It's generally accepted that the nature of businesses temporarily changed by this current situation. This includes staff now having to work from home and changes related to the treatment and containment of the virus. We've seen clients who've adapted their manufacturing facilities to produce PPE and components rather than making bits for their boats, and others who've transformed restaurants into large-scale food production facilities for the tired and hungry NHS workers. Everyone needs to do their bit. Insurers aren't usually known for their flexibility when it comes to a sudden diversification of business. However, I'm reassured that most insurers are responding positively to these requests and appear to be taking a flexible approach, particularly where changes are of a charitable nature or likely to protect employment. That said, recommendation would always be check with your insurer and notify them of those activities that have changed, just to be sure. Vehicle. It's likely that lots of vehicles are being used for different things at the moment. A motor fleet policy will only provide cover for your declared business activity. That's usually fine. We've seen a few examples where clients are diversifying their own activities or supporting people in their communities who are impacted, including the NHS Volunteer Responder Scheme. Others have taken on a charitable activity or loaning their vehicles to other organisations for different uses. Although these intentions are really admirable, business owners may not be aware that they're actually exposing their own business. Please check with your broker or provider to establish if you've got cover compromised by any planned changes to your use or your drivers. A number of our clients have had to suspend operations, and as a result, their company vehicles are not going to be used for a period of time. It is possible to negotiate a reduction in cover to reflect the fact that certain vehicles are not going to be used on the road for some time. I will point out though, responses have varied between different insurers, but generally speaking, if vehicles can be stored in a locked compound or building, cover should be able to be reduced to fire and theft only. And it is possible in some cases to include accidental damage and flood. There should be a significant reduction in premium for this type of change too. But there may be some specific requirements when accommodating these requests. They could include declaring the vehicle as stolen. However, you could also save on road tax too. empty and unused premises, temporary business closures, which are non-occupied. The insurance industry does not tend to think it very positive that we have unoccupied properties. They consider a much higher risk of damage than when they were occupied, from things like water damage, arson, and theft. Property insurance policies commonly contain clauses which automatically restricts cover or excludes if buildings are unused, and this is for a specific length of time, usually between 30 or 60 days. They'll include requirements such as removal of waste or isolating your building services, periodic inspections or visits. Given the government guidance to avoid non-essential travel during the lockdown period, these requirements may be difficult, if not impossible, to comply with. That said, it's pleasing to see that insurers are generally reacting to the situation positively in an attempt to help and support customers. If your business has temporarily closed because of COVID-19, I'm seeing some flexibility within the usual policy conditions. Another consideration is construction sites, because as with property insurance, construction policies will usually include some of these certain requirements, particularly if your work has ceased for whatever reason. It's important to note though, while insurers are often relaxing the requirements, they're not removing them entirely. So some tips of things for you to consider. Check policy conditions relating to unoccupied properties or your construction sites. Speak with your broker or provider about your own circumstances. Record your information gathered and agree some actions. Document all visits and internal and external inspections you carry out. And if you can't, consider appointing an external property inspection provider. Statutory inspection. The requirement for periodic inspection and testing remains in place during the outbreak. The HSE have issued some guidance on the subject and it's available on their website. I've put a link on the slide. We've experienced clients having difficulties to comply in recent weeks with 4 key areas. Reduced availability of engineers due to sickness, absence and self-isolation. Clients refusing access to premises as they feel unable to accommodate the visiting engineer, whilst maintaining good social distancing. We've also seen engineers refusing to enter clients' premises due to their concerns about social distancing. And finally, plant and equipment just not being available because the site is closed. There are some important things to consider. Your equipment should only be used outside of its test regime if you can demonstrate that it's critical for essential work and that it can still be operated safely, or simply just stop using that equipment. The overarching legal obligation remains: ensure that equipment is safe to use. Remote working. Typically, insurance policies don't tend to be flexible enough to cater for the mass working at home. They've never needed to be. That said, the response from the industry has been positive, with many insurers automatically extending cover to include assets and computer equipment whilst temporarily at the homes of employees. From a liability point of view, employers' liability policies usually automatically provide cover for clerical or administrative home working. For many businesses, this will represent a significant change to their normal operating procedure, and it's therefore important to ensure you can continue to comply with the relevant legislation, such as the Health and Safety at Work Act. Helpfully, the HSE have published information and advice on their webpage with regards to home working, and I would strongly suggest that everyone carefully reviews this. Some things you need to be considering: risk assessments. Are they being undertaken or reviewed on a frequent, dynamic basis, particularly if you've got any workforce who are at high risk? Are you supporting staff with managing fatigue, stress, isolation? Make sure you provide a consistent and accurate accurate information to your employees about the situation, what it means for their jobs and their health and safety? Are any of your staff experiencing financial stresses? Organisations are making dynamic decisions every day, and they will be making difficult decisions involving protecting workers whilst continuing to deliver usual services. Above all, are you taking as much care as reasonably required in these circumstances? And will you be able to provide documented evidence to risk assessments and your decision making? Flexibility. Everybody is faced with an uncertain few months, and cash flow is even more important than ever before. Generally speaking, there are various ways in which policies can be restructured or certain elements of cover reduced, suspended, or cancelled if need be. These changes will have an impact on the overall insurance premium, which may be beneficial at this time. The options available to each business will be different, so it's difficult for me to give any general guidance. I would recommend speaking to your broker as soon as possible. Carry out a review of the cover to establish what can be agreed. Find monthly payment facilities or a premium finance. Most providers are being quite proactive on the subject of premium payments, and we've seen most requests for payment holidays or changes in payment terms being accommodated. I'm now going to move on to the emerging issues and future considerations. We're starting to see new challenges emerge as insurers struggle to get to grips with the practicalities of large teams working remotely, added with the anxieties around where claims could come from and actually how exposed are they. The insurance industry has been very quick to declare its business as usual. However, my experience is the marketplace is actually somewhat different. There are a few things that I really want you to know. It could have a significant impact on you. I want to talk about the problem products and sectors: management liability, crime, professional indemnity, and in some cases, cyber premiums are rising significantly. At the same time, cover under these policies are being reduced and excesses increased. We've seen some big changes in the professional indemnity sector in the last few years, with availability of capacity in the market reducing by around 50%. Very recently, we've taken a much tougher stance on cover and pricing for the leisure, care, retail sector than I've ever seen before. And this is because we're entering a hard market. Hard insurance market is categorised by a high demand for insurance coverage and a reduced supply. During a hard market, insurers oppose stricter underwriting standards and issue limited number of policies. That means premiums are high and insurers are less inclined to negotiate terms due to the reduction of competition within the marketplace. As I mentioned previously, the initial areas to experience hardening were professional indemnity, closely followed by management liability and crime. Towards the end of 2019, we began to see signs of insurers pushing rating in the cargo sector, and I expect this to continue in the not too distant future. Sadly, it's just not safe to assume that our renewals will be secured easily and that your policy will have the same extent of cover or similar premium levels going forward. The extent to which your renewal will be affected by a hardening market will vary depending on your own risk profile, your claims record, your strategies for your risk management, and the capabilities of your insurance broker. I think it's safe to say that many businesses are likely to see increases in their premiums. So when should you due for renewal? Response times are generally much slower than usual at the moment. It's really important that you engage with your broker and insurer as soon as possible if your renewal is coming in the next few months. Typically, we commence the renewal process 4 months ahead of renewal, but in certain industries, we're working 6 months in advance due to the specific challenges in the marketplace. This is particularly important as we start to see underwriters introducing new policy terms, restrictions or exclusions due to COVID-19. Be prepared to be proactive and be involved in the renewal process. Be ready to answer more in-depth questions from insurers. Thank you, everyone. I appreciate I moved through this really quickly. So if there are any specific areas you would like me to go back over, I'm more than happy to. Just let me know.
Thank you very much, Emma. Thank you for that presentation. And we're going to open up now to questions and answers, and we will deal with those as they come through. So thank you everybody for your participation in today's webinar. Thank you especially to Emma. And Emma, thank you for that wonderful photograph of Leadenhall Market. Back in my chartered insurer days, I spent many a profitable and pleasurable lunchtime in there negotiating deals with brokers.
It's been thank you for listening to me.
Yeah, well, it was great fun. So let's for everybody on the call, if you've got something that you think would be of value to share with members, then please do get in touch with us. We want to make sure that we're giving everybody as much information as possible that's relevant and useful at this time. And do get in touch with any of the ambassadors if you have any particular questions or looking for support from the IoD. And please do complete the evaluation form from the link in that chat area. All that it remains for me to do now is to thank Emma very much. Thank you again, Emma. Thank you for your participation today. And please stay safe, stay strong, upwards. Cheers for now. Goodbye.